You're listening to the Construction Leading Edge podcast from constructionleadingedge.com and constructionbusinessaccelerator.com. My name is Todd DeWalt, and it's my job to help you maximize profit and eliminate chaos on your job sites. This is the podcast for the construction business owner, and here's what you're going to get out of this interview. We're going to open up the curtain to find out some of the insider secrets about financing that contractors need to know about. You're going to learn about the two questions that all bankers and lenders ask. There are two things that they care about when you sit down and want to borrow money from them, or your clients want to borrow money. You're also going to learn why Giri Addanki, who's my guest, says, quote, 0% interest cards are like kicking the can down the road, end quote. And how you want to be careful about getting caught in that cycle of flipping from one 0% card to another. You'll also learn how you can use financing on your projects to increase sales, even if you do commercial work. You'll also learn about the three different financing models that are out there, and about this new, or relatively new model that Giri Addanki and the Acorn Finance team are using that is what he calls bringing the marketplace approach to the kitchen table. You'll also learn about some misconceptions when it comes to offering financing and how the flow of money works when you offer financing. Basically, you're going to learn what's in it for you. If you're working with residential clients, you need to be set up with the ability to offer financing, and even if you're a commercial client. But this is a good one because of the insider secrets you're going to learn. Before we get to that interview, there may be a couple of resources that I want to share with you. I don't want my competition to know about CoConstruct because it gives me an edge over them. That's what one custom home builder told me after using CoConstruct for a couple of years. I referred one of my coaching clients who's a custom home builder to CoConstruct, and after using it for a couple of weeks, he said, the ability to schedule projects weeks in advance has been an absolute game changer. And there's all sorts of other things that CoConstruct does for you. It basically lets you run your entire business on one piece of software. Using CoConstruct means you'll be able to manage your projects with more profits, less chaos, and maybe even with less people. And there are two unexpected benefits to being a CoConstruct user. Number one, it gives you access and membership into a community of other builders where you can share best practices, bounce ideas off each other. And then number two, CoConstruct is not just a software company. They don't want to just sell you software. They will help you become a better builder and better at business. As one builder told me, quote, CoConstruct cares about my bottom line, not just theirs, end quote. So if you're a home builder, remodeler, general contractor, and you want to up your game, reduce chaos, increase profits, then go to constructionleadingedge.com/CoConstruct. See what CoConstruct can do for you. If you sign up, make sure and tell them that I sent you, and then I'm going to load you up with some bonuses, some templates that will help you get up the learning curve even faster. But go to constructionleadingedge.com/CoConstruct and see what it can do for you. All right, without further ado, here's my interview with Giri Addanki from Acorn Finance. Enjoy. All right, Giri, thanks so much for being on the podcast. We're going to talk a lot about financing, but how are things going for you today?
They're going well. We've been really busy, and I'm based in Sacramento, California. It's a nice and bright, sunny day here, so no complaints.
That's good. That's good. Surviving the pandemic.
Mm-hmm.
All right, let's jump in, and we'll talk about your company, specifically what you guys do. But this conversation is all about offering financing, how contractors, not offering financing to contractors for capital loans and that sort of thing, but using financing to grow your business by offering financing to homeowners. So let's start with this. What are some of the most common misconceptions that contractors have about offering financing to their customers?
Yeah. So some of the common misconceptions, I would say number one is, hey, my customers don't need financing. So, whenever I go, I only, most of them seem to have cash. And that's not true. Couple reasons. Number one is, 2/3 of Americans don't have $500 to $1,000 to meet emergency expenses. But But a lot of Americans who actually, you know, have a Mercedes parked outside and seem to be affluent, they still hand to mouth. As you know, we all know it's expensive to live in, especially most of the cities in America. So the way customers look at financing is, hey, what are my options? And so providing them with those options really helps. And two things to think about financing is A, whether they can afford it, and B, whether they have the liquidity. So if there's a project that is supposed to be $5,000 and it's going to cost, the customer's perception is $5,000, they budgeted $5,000, it's going to cost $15,000, they want to get it done, they probably don't have the liquidity right away. They probably have the liquidity in about 2 months when they get the tax refund. So number one is, I would not assume that they don't need financing, and I would provide that. The second misconception is that in today's time, especially post-COVID, lenders are not offering financing. Lenders are tightening up. They have, to a certain extent, tightened up a little bit, but this is not 2018, where most lenders completely shut down because we had a balance sheet kind of recession there. And now, consumers are fairly strong because of the stimulus package. And the third piece I would say is the misconception is, financing is too complicated. And when I say that, a lot of contractors feel like, hey, I can't explain APRs, I can't answer all of these questions, and it's just too complicated. I don't want to get into it. The tools that are out there are fairly straightforward. They are they're online, they are mobile and paperless, and the contractors don't need to answer all the questions. The lenders and the companies that provide these tools can handle most of those questions. So I would not, I wouldn't worry about being an expert because it is complicated, managing financing, but the tools have made it easier.
So there are obviously a lot of misconceptions and some things that keep people away from even attempting to get set up with financing. And I've spoken with some of my clients about it personally. I'm a big proponent of offering financing because of some of the reasons that we're going to talk about. But for the people that do offer financing and they make mistakes, if they get set up improperly, what are some of the most common mistakes that contractors make when getting set up to offer financing?
Yeah. So when getting set up to offer financing, one mistake is, do they understand, the different financing programs that are out there and how they work? Number two is, they shouldn't they shouldn't think about offering financing as something that they have to now sell financing. So most contractors think about financing as if they have to now sell financing to their customers. Rather, successful contractors who leverage financing just sell better by using financing as a value-added service to their particular service. So and so even things like financing, the term itself can be a lot of customers are not excited about it. So talking to them about payment options and things like that. And then the other thing about getting set up is figuring out how the whole process works. So when does the customer get paid or the contractor get paid, and what are the details around that? And then finally, I would say financing, and we'll talk about it a little bit more. Things have changed and things have evolved. There are some newer technologies out there, like what we're doing. So what was happening 10, 15 years back is no longer the case. So maybe understanding a little bit about what is out there and how newer technologies are different from what was happening before, and not having those preconceived notions.
Got it. All right, let's talk about selling. Contractors want to sell more and sell at higher margins. Those are the two things that most contractors would like to accomplish. So let's get really specific. How does offering financing help either sell more work or sell work at higher margins?
Yeah, it's a good question. So if you think about a contractor, a contractor can do maybe 3-4 appointments a day. So time is the biggest constraint. So in a place like Sacramento where we live, it is for a contractor to go for an appointment, it would take probably half an hour to drive to kind of one of our suburbs. And the contractor now spends another maybe half an hour, 40 minutes with the customer. And after the sale, and the contractor says, well, here it's going to cost you $10,000 minimum. And then you can actually have these 3 add-ons and, price it, get it'll be $15,000. And the customer is like, oh, I don't know, I need to, think about this. Let me get back to you. Or if the customer says, I don't have the money, what happens is the contractor has lost that time, and B, the contractor has lost, if the contractor is paid for lead generation, maybe $200 on, to Home Advisor, the contractor has lost that as well. So first thing, to me, the contractors have 2 problems. Number 1 is lead generation, and number 2 is efficiency. How do you kind of manage your time better, right? So in this case, the contractor has lost both of those. So the first step is having financing in the back pocket really helps you. And time, that's all the contractors have. It's a perishable commodity. Once that appointment is gone, it's gone, right? So having that in your back pocket helps you optimize every, appointment, and also optimize the lead generation. Number 2 is including financing and selling. So it basically obviously depends on financing. There are different programs we'll talk about. Again, some are free, some have, some you have to pay for. But having that in the frame of mind and making sure that if there is any cost associated, you are covering that cost accordingly. And it is embedded in your P&L. So that's that's the second piece. And the third piece is being seamless about it in terms of the sales pitch, right? Where letting the customers know, and the car dealers do it so well. They have sold you the car, and very seamlessly they get into the financing and try to help you with buying that car, including those add-ons. So I would say focusing on the sales pitch and continually improving on the pitch, and not being apprehensive about selling financing or adding financing to your product.
And in a little while, I'd like to talk about, obviously we'll talk about what's different about Acorn Finance. And then I'd like to talk about a sales process, because what I found is people are like, yeah, financing sounds good, but I don't know when to offer it. I don't know how it affects my pricing. Do I need to bake it into my price? How does all of this stuff work? So I think getting into that level of detail will be good in a few minutes. Before we do that, let's talk about, you mentioned that things have changed. 15 years ago, 20 years ago, things were different. Probably even 5 to 10 years ago, things were different. But what are some of the latest and greatest financing models that are out there that people need to be aware of?
Yeah. So, let's talk about really 3 models to simplify it. In the old world, or even a lot of contractors use that today, you walk into a customer's house, and when you have your pitch and you have your estimate, say it's $15,000, and the customer is like, well, I don't have the money right now, or I have $5,000, I don't have the rest. The contractor can say, hey, listen, go, men assuming that they don't want to put it on their credit card as well. The contractor would say, hey, go to a local bank. I actually know, this branch manager of, this credit union. You can go and get financing there. So what happens there is the contractor has put a pause on the sales process. The customer has to go to a local bank. And really what happens is the customer goes, fills out a bunch of paperwork, and depending on their credit, etc., either they'll get that or they won't, and it takes a few days for the local branch to go through the process. What they're doing is they're going through their credit, they're going through their income, and they're trying to figure out how much money they need, $15,000 in this case, and whether they have the bandwidth to pay it back. And then they basically tell them, we'll give you $15,000 at this rate. So that's one model. The second model, where you have several companies like Green Sky, Service Finance, Wells Fargo, what they've done is they've basically created technology where the contractors can do this at the kitchen table. So instantaneously, if it is $15,000, then the contractor can pull out an app, the customer fills out, and they get approved fairly quickly at the kitchen table. And they then the customer gets the money, but earmarked to the contractor. So the contractor indirectly gets paid. The two approaches here, one is companies like Green Sky, what they do is they generate an instant credit card right away. And so the contractor uses that credit card to process the payment. And there is stage funding and stuff like that there. And in some other companies, they just give just a cash loan. So the second model, the first model is free, where the customer is going and getting their own financing. The second model has been around for over 2 decades. And there is some dealer fees involved for the convenience of this. In the second model, you have one lender associated with kind of one contract, and the contractor has to go and get that app. The third model, which is emerging over the last 4 or 5 years, and really it has come from, if you think about banking, airlines, for example, when you had to buy an airline ticket, you went to an agent, and the agent went and looked at the best airline ticket and bought it for you, and you paid $20 or $30 for the agent. And then now everything is online. And not only is it online, but also you don't go to Delta anymore, you go to an Orbitz or a Kayak. Same thing with hotels. So people are now used to comparison shopping. So banks were some of the last it's one of the last industries to get onto marketplaces. But in the last 5 to 7 years, you're starting to see more and more banks coming onto marketplaces. So the third model is what we're a part of, is taking that marketplace approach and providing contractors with a similar app. And then the idea here is where the customers, when they apply, they get several options. And the second model, where the customers get limited set of options because the contractor decides which one to offer based on how much he or she has to pay. Whereas in the third model, in the marketplace model, the contractor, in this model as well, there's a free and a kind of a paid model, but the contractor does not have to pay any per transaction fees. So now the customer truly gets the option. So those are the three models where the contractor just refers the customer to a local bank or an online bank. There's a kind of a point of sale service with one lender, and then a point of sale in a marketplace environment.
Got it. Makes sense. And obviously this marketplace comparison shopping model has been proven out because there are comparison websites for everything imaginable.
That's right. That's a good point, because look, customers now want to compare stuff, right? They're comparing several contractors. They're comparing several, type of tiles. So, and they want to compare financing as well. So we live in a world where you want to compare, but also you don't want to spend all day by putting together a huge Excel spreadsheet and comparing. You want to compare with kind of a click of a button. The customers more and more expect, and the first thing that comes to their mind if they say one product or one offer is this the best? How do I know? What are my other options?
Yeah. Is this guy making something on the backside of this transaction? Am I locked into this lender? What's the deal? Yeah, makes sense. What are some of the different considerations that contractors should think of if they have a checklist of things to keep in mind as they're picking the right lending solution for them? What should be on that checklist?
Yeah. So number one is product versus labor. So if it is a product like HVAC, 80% I would say is the actual HVAC product, and then maybe 20% is labor. And in that case, they want to think about, and you will see that the HVAC financing operates very much like a car dealer financing, where the manufacturers kick in some of the discounts. And so when if they are dealing with Carrier or Goodman, they can take advantage, or they can make sure that consumers, customers, homeowners take advantage of those deals. So that's one thing. Number two is cost, where for a lot of contractors, especially for smaller projects, smaller ticket projects like plumbing, even HVAC, I would say sub 10,000. If the financing comes with a cost associated with it, you can kind of bake that cost into your project because of a couple reasons. One is these projects typically are needs and not wants, and the customer has to get those things done quickly. So you want to basically make sure that you're able to provide that financing and get that job done quickly, and then you also have a ton of I would say volume, because you can do 3 or 4 HVAC jobs maybe a day or more in terms of you're a bigger contracting firm. So I would also say, yes, can I afford to pay that cost, and also how fast is a financing solution, and that so the trade-off is between how much do I need to pay and how fast can I sell and can I implement, right? In contrast, if it's a large pool or remodeling job, which costs $35,000-$40,000, you don't need a super fast financing solution. You can wait for a few days for the customer to get the funds, and also if it is in those cases, also in a lot of cases, you will find that customers are not necessarily looking for a 0%, right? Typically, they'll do 0% for a $4,000 or $5,000 job, but not $30,000-$40,000 job. Customers will look more for term loans, which are actually cheaper. So now, where the contractors need to make a choice is sometimes, and a lot of times, they do both jobs. So what they can do is they can offer the right kind of financing for the right job.
Got it. So here's a question. We didn't talk about this, but you've spent a significant amount of your career, if not all of it, in the lending, working inside of lending and banks. What is something that goes on behind the scenes in a bank or at a financial institution that contractors don't know about, but they should be aware of?
Yeah, it's a great question. Lending lending at the end of the day is a very simple business. There are just two things that lenders worry about. A, um, should I give this person, this customer, homeowner has asked me for $10,000. Should I give the person $10,000? Yes or no? And then the second thing is, the answer is yes, how much should I charge for it? That's it. Those are the two decisions lenders have made for centuries. So what happens is, in the first case, should I give this person $10,000? Yes or no? What happens is the lenders are, for the most part, looking at, the lenders have what they call it buy box. They basically are like, listen, I have this many deposits that I want to lend. So what I want to do is I want to basically lend to everybody that has FICO greater than 680, and people who are in this income bracket, and people who are looking for this dollar amount, anywhere between 5,000 to 15,000, and they come up with those constraints, because they call it credit policy. That's where they want to lend, and that's their optimal lending strategy. So different banks have different constraints. Now, what ends up happening also is that is influenced by, in economics, they call it exogenous events like COVID or recession, any kind of external events where if you expect, unemployment to go up, their credit standards will tighten. So right now, what we're seeing is the credit standard. Lenders are continuing to lend, but they have tightened a little bit. The second piece is price. So I'll give you an example. A lot of times, basically, contractors leverage the 0% offers from a lot of the finance companies. So the lender basically determines that, Giri, I'm going to give Giri $10,000, and I need to make X percent on Giri over this many months. And then what they do is, if I'm going to give 0% to Giri, then somebody needs to pay for it. And that's where the contractor kind of ends up paying for part of that 0%. And the way lenders price an individual is, again, they look at the current, the FICO, again, income, and the not only the probability of the person paying off, but whether they are going to be able to pay off the whole loan, right? Because they might be able to pay off a $5,000 loan and not a $15,000, right? So, and they're also looking at, when they pull the bureau, they're looking at the historic situation of that individual. So they have models that run in the background, and then they basically underwrite the customer. They determine a price and the term of the loan. And then, some lenders would charge that directly to the customer. The customer pays that, and some lenders basically will say, "Hey, I'll give you a 0%." But then that 0% is paid, as I said, either by the contractor, or in some cases, when you get 0% mail in your mailbox, people say, "Hey, do you want 0% for 12 months and new, credit card or balance transfer?" What's happening is, out of 100 people who are applying for that, about 20 people, making this up, but 20 people would what they call as revolve, in the sense that those 80 people will pay off within that 0%, and 20 people choose to revolve, and they will they'll carry the debt, and that rate will go to like 25.99 or something, and that 25.99 that those 20 people pay covers the 0% for the 100 people. So that's, so somebody is paying. And even the rewards that you get on airlines, when you fly, you get rewards on airlines. There are some people who are paying interest, and kind of those rewards come out of the interest. So there's a cohort of customers paying for kind of or in this case, contractors are paying so the customers can have those low rates.
Got it. Good stuff. I appreciate that. This is a little bit off topic, but if a contractor is thinking about using a 0% credit card or getting money for their business, what are some things that they should be aware of?
Yeah, so we actually, up until last year, we were focused only on home improvement loans for homeowners, and working through contractors. And we are actually a lot of contractors started asking us, "Hey, do we can they take loans using our lenders for themselves, business loans, as well as a lot of contractors have commercial customers?" And they asked us if their commercial customers can take loans, and we were turning them away because our lenders only do home improvement and personal loans. And then we, in sometime middle of last year, we partnered with a company called Fundera, and what we did was we on the same point of sale platform, we now have personal and business. And what we like about them is they are a marketplace as well, where you initiate kind of a transaction online. You fill out a few pieces of paper, and they do a soft credit pull. The credit score is not impacted, and they have 18 lenders onto their marketplace with 7 different products. Now, the reason I bring that up is when contractors apply or their business customers apply for those loans, the 17 lenders, 18 lenders, and the 7 products are SBA loans, term loans, equipment financing, factoring, and so on and so forth. So and they'll come back with 4 products for their need, and they'll say you can either get an SBA loan, or you can get a term loan, or you can get equipment financing, or let's say factoring, invoice factoring. So the point I'm making is I wouldn't assume that contractors would jump on a kind of a 0% offer from a credit card. I would first look at the option, because the challenge with 0% is at some point that 0% expires, and then you have to it jumps to 24.99 or whatever the interest rate is, and then you're just kicking the can down the road. Rather, I would step back and try to understand, why do you need the capital, and then try to either look at a marketplace like what we have, or approach kind of your local financial institution and say, "Hey, here is my need. I want to buy new equipment, or I want to, I have working capital issues. I have these invoices, but I have to, I need some capital to, because I have, I have receivables and payables problems." So define what they need, and then make that choice. And then also, there are several products. Look at several products that fit that need. And is it a temporary need or a long-term need versus just getting into some product?
Yeah, that's good advice. If you have a long-term need, don't take a short-term solution, because right, as you said, you're gambling to some extent. Or in some cases, if you take a 12-month 0% interest card and then hope for the best. I think Chris Voss, the author of Never Split the Difference, said hope is not a strategy. So if it's a 2-year program, then find a 2-year solution. That's good advice.
It's funny. Yeah, it's funny you're talking about that. I actually just, he's not a contractor. One of my friends called me 2 days back, and he's had, about 2 or 3 credit cards that he's been getting 0%, and he's been moving it around. And what has happened in the last 2.5 months is you will notice that you don't have a lot of 0% offers in your mailbox. And the reason is because, coming back to what we were talking about, banks is they price based on historic behavior, And then all of a sudden now with COVID, the historic behavior goes out the window, and they're trying to recalibrate. So I'm starting to see 0% offers come back just now. But my friend, his 0% offers flipped just during this time, and he hoped that he would get two more, and he didn't. And now all of a sudden he's stuck with huge interest rates.
Yeah. All right, let's talk about Acorn Finance specifically. What makes Acorn different? We've touched on this a little bit, but what's different about your approach?
Yeah, so just fundamentally, what's different is a couple things. Number one, as I was saying early on, marketplace is evolving. Customers are getting choices. So what we have done is we have taken that marketplace technology and we have brought it to the kitchen table. So just the difference between traditional financing is the sales rep and the contractor is at the kitchen table. The customer needs financing, and first of all, the contractor doesn't even talk about it because it involves fees. But when they talk about it, there is for them to get financing, they have to get approved. They have to be in business at least for 3 years, and they have to have a certain balance sheet. So number one, what we have done is we have made financing available to all contractors, because our theory is, as you know, this is a relatively aging community, and there are a lot of contractors are getting in this business, and we need younger blood, A, and B, a lot of contractors have been working for a contracting firm. They leave and they want to start their own company, and they don't get to take advantage of financing. So what we want to do is we want to make it available for everybody. That's number one. Number two is there is a kind of a dealer fees associated with some of the traditional programs. We've taken that out completely. It's 100% free. We don't charge them anything. And a lot of times, contractors ask me, "What's the catch?" What's and the catch is that there's no catch in the sense that we are using marketplace technology, and it is just like when you have a good example is in investing. You have E-Trade, Ameritrade, Charles Schwab. They all charge some $5.99, $4.99, and then about 6 years back, there's a company called Robinhood that came and they said 100% free. We are not going to charge you for any of the trades. And what they do is they make money on just moving the money around from different buckets. It's very thin margin, but because it's built on latest and greatest technology, they don't have all this legacy cost. So what we're trying, and then they're able to pass it on to the customers. So we are using the next generation technology, and we're able to keep it 100% free. And we actually get paid a small finder's fee from lenders. So, and the third final thing is what happens with the traditional model is at the kitchen table, when the customer fills out a form, the contractor decides, should I offer a 0% product where it's going to cost me 15 bips or 15%, or a 999 for 10 years where it's going to cost me 1 or 2%, or sometimes it's free. And the contractors have to think through that, right? It's true, stressful. So what we have done is we have said, we'll let the customer apply. So the way it works is contractor sends out a short application form to the customers. The homeowner fills out the form. It takes 60 seconds. And then as soon as they submit, we hit 6 lenders, and they come back with several offers that are pre-qualified with no impact to the customer's credit score. And they look at the offers and they pick the offer that suits them the most. And then they instantly get connected to the lender. They fill out a few more pieces of information. And then they get the money in their bank account as early as next day. So the customer becomes a cash buyer. Our goal is to take the contractor as much as possible out of the equation. So that's the and it is as it's coming back to the original example. It's as good as a contractor saying, "Hey, go to these 6 lenders and apply and get the best offer." We're just doing it in seconds and minutes. So just broadly, we actually do up to $100,000. So we fit really well for those big ticket needs and big ticket wants as well. But since the money gets to the customer in a day or two, we sometimes don't fit well into smaller ticket needs, where if it's a plumber here, the plumber is right there. So some of these traditional models, they are actually quick. They get the money right away to the customer. The second piece is we do not have 0% yet. We're actually working on that. We don't like 0% because they cost money. We're trying to work on how do we make 0% free. But our rates are very competitive because, again, it's a marketplace. The third thing is the difference is we have several lenders. So we have super prime, prime, subprime. So the contractor doesn't need to worry about, oh my gosh, my customer got declined, so I have to look at another lender and start the process all over again. The fourth thing is, since it's a pre-qualified offer and the customer's credit score is not impacted, the customer can just shop around. And what we encourage contractors to do is upfront in the sale, say, hey, we're going to talk about your project. And then if you're interested in financing, I have a solution. The reason being that it's not going to cost them money, so they can talk about the project. And then once they do the estimate, they're like, hey, I told you early on, we have this financing program. And again, you can look at it. And if you don't like those offers, no impact to your credit score, no harm, no foul.
Yeah. What really caught my attention was the fact that the contractor is removed from the equation. So, as you mentioned, most lenders like Green Sky or an Interbank or somebody like that, they want you to become a dealer, and they underwrite you as the contractor, and your credit score comes into play, and you have to sell you have a quota or a minimum amount of sales that they put on you, and then you have to decide, what do I offer? Or you have to figure out, do I bake in, if I'm going to offer 0%, do I have to bake in this financing charge? How does this work? And the beauty of what you guys are doing is there's no underwriting. So you don't have to be in business for 2 years to offer financing. You're completely out of the equation. Your credit doesn't come into the equation, and it's not affected. Even if the customer defaults, it has nothing to do with you as the contractor. You're just referring them to a source, and all the money flows from the lender directly to the homeowner. And what I could see is that this is going to help contractors cash flow, because if the money goes straight to the homeowner, then you can get bigger deposits up front. The money's there. The chance of having a collections issue toward the end of the project is a problem. To me, it's also a good way to sell upsells and upgrades. Mm-hmm. So the difference, if somebody's spreading the cost out over a 5-year loan, for example, it's not a $20,000 add to their remodel. It's a few more dollars a month, and you get a new bathroom, for example. So makes a lot of sense.
The one other thing is also, a lot of times, since the customers get cash deposited in their bank account, the contractors can ask the customers to just write a check, so they can save on that 3% interchange. Because in the case of a Green Sky, they not only pay for dealer fee, but then you have to tag along another 3% of interchange, and that starts getting you're starting to pay close to 18 to 20% of your project, which is very prohibitive.
Yeah, definitely. Okay, so I think we touched on this, but when is the right time in the sales process to bring up financing? Is it at the very beginning? Is it in your marketing? Is it after you've presented the estimate? When do you feel is the best time to bring up the fact that you offer financing?
Yeah, so I would say, uh, uh, all the time, including the beginning. And this is what I mean by that. Some of the contractors that are able to use us in the best, at taking advantage of our platform as well as other platforms, the best is they on their website, they would say, hey, we offer financing. In their sales pitches, they'll have, we offer financing, and the actual pitch that they have to the customers, they will basically say, hey, listen, we do have a financing program, and then finish their pitch. So you don't want the customer to get the sticker shock, and then you lose control over the sale, right? So you want to make sure that you provide that. Number two is your competition. A lot of I have looked at several businesses, both currently with Acorn, as well as I used to work for some of the players that we talked about, and contractors can generate 30 to sometimes 60% more revenue with financing. And so you want to talk about it all the time. You want to offer that in various channels, even if you're doing Facebook or any kind of social media stuff. You want to let them know that, hey, we offer financing. And that way the customers are like, all right, now not only can I shop around with this contractor, but also, I can, this contractor has some payment options for me, but also finally, you come across as mature. You come across as, hey, I'm a sophisticated contractor, and I know that not only am I going to be able to do the work for you, but also help you really think through how you're going to pay for it and provide you the right options.
Definitely. A few other quick hit questions, some of which I think we have already covered. Does the contractor's credit come into play or get affected? No, it does not.
With Acorn?
With Acorn?
With Acorn, yeah, it doesn't.
What loan amounts are offered? You mentioned up to $100,000. Mm-hmm. Okay. How long does it take for the funds to be issued?
Anywhere between a day to 3 or 4 days, and the only gap between that is, in some cases, if the customer is looking for a $50,000 loan, the lenders would ask them a few more pieces of information, and the customer responds fast enough, then they'll get the amount faster.
And will the funds be handled as a draw on a bigger project, or if somebody borrows $50,000, do they just get one lump sum?
Yep, one lump sum, 50,000. One of our lenders, actually, you can postpone when you get that 50,000. So it's a pool project. It's not going to start for, let's say, 15 to 20 days. You can say, I want this money to hit my account in maybe, say, a month. So they'll defer that. But yes, it's one lump sum.
Got it. How does the flow of money work? Sounds like the money goes from the lender to the homeowner, and from the homeowner to the contractor. Okay. And one last question. We've talked about some of the conventional contractors, the typical contractors who would do this: roofers, deck builders, remodelers, HVAC, electrical, concrete, anything, some of the typical home improvement type contractors. But what are some of the maybe not so obvious types of contractors who offer financing, or the not so obvious types of projects that people are offering financing on?
Yeah, so it's interesting. So we see that typically when it comes to really large ticket sizes, like landscapers, to a certain, like pools, and then there's some pool builders offer financing, but pools are another good example. We do a lot of work with large post frame building. We actually work with 7 out of the top 10 post-frame pole barn building companies. These are, really large, barns. And typically what we see is, again, in a productized world where windows, doors, HVAC, water treatment, where you have these manufacturers who are able to market and share their financing programs. It's used more there versus kind of a landscaper who's really not associated with one large manufacturer. And the second way we've seen is GCs, like general contractors. Again, landscapers is a good example. The designer comes to your house and is sourcing a patio from a manufacturer and sod from somebody else. So GCs generally are not using financing, but for them, kind of a solution, kind of a marketplace solution works really, really well because the ticket sizes are really big. And then since the funds arrive, they're able to have kind of more control over the funds and they can, disperse it accordingly. So larger ticket sizes and GCs definitely have a lot of opportunity.
You mentioned,
and by the way, just one quick thing is home improvement in the U.S. is $400 billion, and only about $100 billion is financed. And when I say finance, it includes credit cards, personal loans. But a lot of it is credit cards, which truly is not financing because you are just putting it in your card. So there's a lot of opportunity for contractors.
Yeah. What is, and this is, we didn't talk about this, but I'm curious, as you look at all the types of contractors out there, you've got the unique vantage point of seeing all of this work going on and seeing what's going on the lending landscape. Mm-hmm. Curious, is there one type of contractor or one or two types of contractors that you would like to say you guys are really missing out because you're not offering financing? You mentioned general contractors, but I'm curious, is there another type of work that's going on and that you would, if you talked to somebody who did that type of work, you would say, dude, you need to be offering financing? Yeah,
definitely. I would say interior and exterior remodelers, right? Again, they fall into the bucket of landscapers and pools. They are larger ticket items. They're complex projects. Talk about each sale is so critical because it could be either, you lose the sale, or it could be a $50,000-$60,000, project. So you want to make sure that, you talk about financing and not assume that, the customer is going to somehow figure out, or liquidate their 401k, or, hey, it looks like they live in a great house. They probably have financing or capability. So definitely large ticket items, and then especially as they, exterior remodeling, starts, you're including several pieces of work. So it can go, it can be pricey. And finally, you also have the prospect of, our landscapers, for example, they'll be like, here is a $25,000 landscaping job. By the way, I can add a sunroom. It's going to be another $15,000 if you want to do that. And if you can take care of $25,000, actually you can finance just the $15,000, right? Because there's a lot more room for upsell and big ticket upsell in both interior and exterior remodeling. So I would keep that in mind for sure.
Yeah, that's great advice. The way I would handle that is if somebody's thinking about doing something, then, hey, let's do it now while your house is disrupted, because you're going to have this hurdle. You're going to have to get over the emotional decision of doing this work. You're going to have to go through the headache of getting a contractor and getting it priced. And then if there's a pretty good chance you're going to do this work at some point, do it now while your house is already disrupted. The incremental difference and inconvenience is going to be pretty low. And then that could be enough to get somebody pushed over the edge and say, yeah, you're right. Let's just go ahead and do it. Great stuff.
Right. And in our case, especially, one quick, in our case is they can just look at their financing options and they don't need to finalize it, right? They can, if they don't like it, again, there's no impact to their credit score, so they don't need to take that particular offer.
Yeah. One thing I would echo is don't project your thoughts about somebody onto them. Don't assume that they don't need financing or that
it's a very good point.
Offering financing is somehow suggesting anything about their financial situation. Just do everybody a favor and talk about it early and often. So great stuff. If people want to find out more about what's going on at Acorn Finance, if they want to get signed up, which again is free, there's no underwriting. I can't think of a downside, quite frankly. Where should people go?
They can go to acornfinance.com, and right on there is two sections, homeowners and contractors. They click on contractors. They have two options. They can talk to somebody if they need more information, or go ahead and sign up, and they can get started as early as the same day. So they don't need, we don't have, since there's no clear underwriting process for them, they can sign up in the morning and in the afternoon go off for financing.
Great stuff. Giri, I appreciate you taking the time to be on here. Thanks for what you're doing for contractors.
Likewise, Dot, and thanks for what you're doing as well. I'm sure they appreciate all the advice that you give them. It's really challenging, especially during these times. Appreciate it.
Thank you. All right, lots of great information there. Go to acornfinance.com, check it out, see if it's right for you. If you're doing residential work, I can tell you it probably is right for you, and take advantage of that. Increase your revenue, increase your margins, sell more work, all good things right there. But take action. Don't just listen to this and say, yeah, that's a great idea. A lot of people suffer from what I call information bulimia, where they just consume and listen and read and watch and pontificate about stuff, but never take action. So don't be an information bulimic. Put this stuff to work. Pick one thing out of this podcast. Go take action on it in the next 24 hours. Get some benefit out of it. And speaking of benefit, if you get any benefit out of this podcast, then do me a favor. Share it with somebody else in the industry, a business owner, a project manager, a superintendent, somebody who might get some value out of these interviews. And if you could leave a rating and or a review on Apple Podcasts, that would be fantastic. That helps get the word out there on the interwebs. All of the robots behind the internet that share podcasts, they like ratings and reviews. And you know what? I kind of like them too. So if you could do that, that would be fantastic. If there's anything I could do for you, head over to constructionleadingedge.com. You can contact me there. Follow me on LinkedIn, Facebook. I'm out there. Until next time, I'm Todd DeWalt. Thanks for listening. Bye-bye.